On today's hot sheet, I'm discussing housing inventory for the past week, the NAHB-Wells Fargo Housing Market Index for October, and home sale profits for quarter 3, 2025. Today is Monday, October 20, 2025. I am Byron Lazine, and the hot sheet starts now. Welcome in live from Deer Valley, the montage here in Park City. I hope wherever you're tuning in from this morning, you're doing well as we kick off this October 20th, this week of the hot sheet. Thank you for being here. It's a great honor to be here with you guys each and every single morning, Monday through Thursday when the markets are open. It's the only live housing show on the internet for real estate professionals. On days that the market is open Monday through Thursday. And I'm pleased to be here with you guys. All right. We got a bunch here to get through. Let's get through it. First up is housing inventory here for the past week. Housing inventory has started. For the last couple months, it hasn't done anything, even after all of the gains we had throughout the year. I've got Haley back from bike week number 2 on the year. Thank God we have Haley back, and she's going to help me out here with the slides. So Haley, let's go to the first. Let's go to the first housing inventory slide. If you could just take a look, we did get an increase here this past week on housing inventory. Of course, all of the slides that I use in the show each and every single week can be found in the hot sheet classroom for BAMX members. Just go to school.com/BAMX. You get all of the slides that I use. Haley, you going to that? There you go, Haley. All right. I was giving you all that props for being back. There you are. You're back. 16.4% more inventory than this time last year. Now, remember, this is 30+% is where we were during the spring. So this gap is closing considerably. Okay. Up about 17% year over year. We had an increase on housing inventory for the past week of about 3,000. So after seeing some declines, some real declines on inventory, we go up from 856,000 to 859,000. Housing inventory typically peaks in October. It looks like we peaked in the first week of August this year. Okay. We've been flat essentially since the end of July to today. If you look back to the last week of July, actually the third week of July, we had 856,000. That's what we had last week. We had 860,000 the last week of July. We're at 859,000. So we're net negative where we were just barely, but the very end of July. Now we are going to be in a seasonal decline. We get that each and every single year, a seasonal decline, not only on new listings, but on inventory in general. Despite the momentum that we've had on the rates. If we go to new listings, Haley, new listings tells us a very similar story as what these last couple of years have told us. New listings, which last year were the lowest level ever recorded. Well, we're not doing that much better. There's not that much of an incentive here for sellers. New listings this year peaked on May 23rd. And then we started our seasonal decline from that date. So new listings have been seasonally declining since pre-Memorial Day weekend, okay, right around that time. We'd love to get into a range of 80,000 to 100,000 during peak seasonal months. That's what we used to get during peak seasonal times pre-2020. We didn't do that, and the seasonal decline is going to take us to a low point again before the end of next year. That's just where we're at on new listings. Listen, we've talked about the incentives that sellers do or basically don't have right now in this market to kind of flood it with more inventory. And so they're sitting back. The sellers that are on the market, there is a group of them that are unserious people. One of my favorite ways to define those who don't take the right steps forward in life. But there is a group that are serious sellers, serious people. If we go to our percent of properties with price reductions, we see that group. We also see that group is probably working with a serious agent, like many of you listening this morning. 41.8% of properties are experience a price cut. That's a higher percentage than last year, but pretty similar to last year. If we think about a lot of these numbers, a lot of numbers are similar to last year. What did Lance Lambert tell us on Knowledge Brokers podcast earlier this year? He goes, listen, a lot of years look like the year before it, with incremental moves, unless you have some kind of huge, economic situation happen. What do you know? Weekly pending sales look a lot like last year as well. Weekly pending home sales are almost identical to where we were last year on pendings. Okay, so pending single family home sales for this past week, 59,000, and yeah, we're literally talking about 100 pending home sales away. Let me just go into the show notes here really quick. We have the show notes available for you guys each and every single week. New listings week over week was 400 more this week, single family across the whole country. Pending home sales, we're talking about less than 100. The decline this week, and that's just a 1 week snapshot. We have seen slight year-over-year improvement since mid-May overall on pending home sales, but we're not really seeing any kind of suggestion that we're going to break through and away from 4 million existing home sales. I mentioned earlier I'm in Deer Valley here in Park City, and it's Realtor.com, Thrive. They bring about 100 people out here or somewhere every single year. And I remember talking about this a little bit on the hot sheet, where last year they asked everybody in the room to put into a hat. We're going to see who gets the closest, and they're probably going to get something here the next couple of days. It's not going to be me to predict on where you think existing home sales would go. And I knew, listen, I know I can remember what I put in was above the 4 million mark. Whoever puts in 4 million is going to get this thing. That's where we're trending. Listen, Fannie Mae has an optimistic viewpoint for next year that we'll get a 10% increase. A 10% increase. It didn't come this year, and I think that's probably pretty optimistic for next year. If Barry Habib, who joined us a couple weeks ago on Knowledge Brokers Pod, is right, and we get into that 5.5% range on the 30-year fix, I could see us getting there. But without a sustained 5 handle on the 30-year fix next year, it's hard to imagine that we're going to get that kind of a pop. There's going to be a lot of the people in this room here that when, they recall back to their number from last year on existing home sales are going to just be like, I was so far off because, sitting wherever we were in Georgia last year, sitting there and thinking about October. And at the time we had some momentum on the 30-year fixed. You start to get optimistic. You start to be aspirational in the way that you think about existing home sales. Well, it hasn't come to bear here. So what's going to happen next year is going to be solely dependent on where these rates go. And I know there's a lot of people that don't want to hear that. But we are in a rate sensitive environment, a rate sensitive industry, and it will depend on where those rates go. All right, there's your update on the inventory using the Altos research through the Housing Wire partnership there with those two. Okay, all right, let's get into NAHB. NAHB is got their index out there. Okay. So this is important to just kind of understand where the builder's mindset is. Are the builders thinking right now that they're going to get a better spring? Are they going to be able to survive the winter? What we don't want is builders' confidence going so low that we see mass layoffs in residential construction. We know that every time we see mass layoffs in residential construction, it does find its way through the greater economy. It really it creates a negative economy. Okay, so NAHB, Wells Fargo, they put together their track. Haley, you can put it up. They put together their data on how builders are feeling. And right now on this index, it rose 5 points, okay, to 37 in October 2025. This is the highest builder confidence score since April. So builders looking at the momentum here on the rates, maybe looking into some of these projections that sales are going to go up next year, maybe looking at some of these longer term projections on rates that, hey, not only do we have the momentum, but there's a belief that 26 is going to be, feel like a boom year versus the last 3 or 4 years and what we've dealt with. It is going to bring lower rates to the equation. And the confidence now has gone up. Now, the confidence has been very low for months, as you would expect. It's the highest confidence rating since April. It's a solid rebound amid ongoing economic uncertainty. We're still getting economic uncertainty right now as it relates to tariffs. Now, what's interesting, and Haley, I don't know if you can find this on your end. You can go to the poly market, and you can look at, so one of the big conversations on tariffs right now, which obviously tariffs do have impacted builder confidence scores when we've seen kind of a heightened environment around the tariff conversation. Right now, the big conversation on tariffs is that we are dealing with something with a trade discussion right now with China, and how's that going to play out? And is China's goal here to hurt the U.S. economy? Right? These are just discussions on the global economic front that are taking shape right now. If you look at Polymarket, interestingly enough, either Polymarket knows or where the money is being bet, which is Polymarket, people are putting their money on the line to bet on this stuff. And like any other market, you're going to have. So look at this, a 10% chance that this. So Haley found the one I'm referring to. There's a 10% chance that this tariff on China is in effect by November, which is only 10 days away, 10, 11 days away, which means there's a 90% chance that it won't, which means, what am I saying? Polymarket, investors, people moving big money on this stuff. There's big money flying around Polymarket. Okay, go look up what Polymarket is worth right now to blow your mind. The big money says, yeah, in the next couple of weeks, Trump, they're going to figure this thing out. And we're going to be back to saying what we've said about tariffs and trade war. It's all a negotiation. Don't get your panties in a bunch. It's like a light switch. It's going to work its way through the system. It's going to work out. 90% of the money says that's exactly what's going to happen. And you're not going to have some kind of, economic issue from that. Okay. Future sales from builders. Okay. So looking into the future, builders expect sales to go up. They moved up 9 points. Okay, to 54 on the score. So builders not only, less fearful of any of the trade war discussion or any of the other discussion that's kind of held them back in recent memory. They're also just now getting a little bit more confident that, hey, there's going to be more sales available going into next year. Current sales conditions right now, those moved up 4 points to 38. Okay. The 50 break-even mark on that sales expectation, it's the first time we've broke it since January of 2025, just going back to that. Okay. Traffic of prospective buyers up 4 points, up now to 25. Not great. Hey, traffic on a scale of 100 at 25, nothing to brag about. Okay. You beat a 5-year-old at Uno like I did a couple of days ago. Nothing to brag about. Not to say I won't mention it like I just did. But you're not going to get any awards for that. Okay. You're not getting awards for 25 on a scale of 100. But it is up 4 points. So they're seeing a little bit more traffic at a time of year when you would expect traffic to be going down. Okay. The seasonal decline. No, what's pushing a little bit more traffic? What's pushing that? Well, there's one big thing. It's the rate momentum that we've seen here now, for a number of weeks. The other thing is when you think about a lot of the inventory from builders, being in places like Florida. What has Florida not had? Knocking on some, I'll knock on the fireplace behind me. Okay. What has Florida not had? Hasn't had a big weather situation this year. So now you might say, oh, well, I was going to buy this year, but I was waiting to see if anything was going to hit. And when that hasn't happened, maybe now buyers are coming in. That's just another thought. There's a lot of, the Sun Belt states are going to influence a lot of this national home builder, confidence scores and what they're seeing on traffic. It's not what's happening in those Northeast states. It's not what's happening in New Hampshire and Maine and Connecticut. These places don't build. Okay. It's what's happening in the Floridas and the Texases and the Arizonas. It's just the way it is. Okay. That's where we're building in this country. 38% of builders reported price cuts in October. So that's a little bit less than those existing home sale numbers that we just looked at, which was up over 40%. The share of price cutting has fluctuated between 37 and 39. Remember, builders don't want to drop prices. They want to hold comps through incentives and through maybe working on a rate for somebody. Okay. All right. So there's your NAHB. Here's some just regional trends. The 3-month moving average, the increase moved up 2 points to 46. And the Midwest was unchanged at 42. The South was up 2 points to 31. And the West is up 2 points to 38. So there's your NAHB, National Association of Home Builders. Confidence is up by all metrics. Builders feeling a little bit better, kind of matching a lot of the feelings we have about 2026 being, kind of a mini pop. I'm not going to call it a mini boom anymore, but a mini pop year. And we might experience just that. All right. Adam, ATTOM, reports that in quarter 3 of 2020 of this year, home sellers earned 49.9%, which is $123,000 profit, 49% profit as records as prices hit a record 370,000 plus. Okay, that's up 3.4%. So the profits are 6 figures. They're up over 120,000. It's a 50%, profit margins fell in 89% though of major metros, yet over still half topped 50%. Haley, if we can go to the first chart there. Here you go. Here's your historical median home sale prices according to Adam. And with this record home sale, you're seeing these profits obviously move up the near 50%. If you go to the next one, this one here, it'll tell you how, here you go. Average U.S. home tenure tells you how long it takes to kind of get some of those profits. The average tenure is how long folks are staying in the home. And it's right now, according to Adam, 8.39 years. This is the longest we've seen recorded on this metric since they have the data. Go all the way back to 2020. The average U.S. home tenure is at its highest level that it's been. So people are staying in their homes longer. One of the reasons, obviously, is the last 3 or 4 years has really increased that type of homeowner tenure where they're going to just stay a little bit longer. And obviously, if prices keep going up, that's a good thing for them. Profit margins, though, did decline quarter over quarter in 58%, 92 of the 157 largest metros. Those would be mostly made up in Florida. Okay, you got Ocala, you got Punta Gorda, you got Northport and Sarasota area, you got Port St. Lucie. Those are 4 of the top 5. And then you have a California region as well. The largest increases, St. George, Utah. Where's St. George? St. George, close to where I'm sitting. I have no idea. I'm in Deer Valley, but St. George, Utah is number 1 for largest annual increase. Gulfport, Mississippi, Augusta, South Carolina. I know there's Augusta, Georgia, but didn't know there was one in South Carolina. Shout out to them. Lexington, Kentucky, Dayton, Ohio. So metros over the 1 million mark, 1 million people that had the biggest annual drops. You got Tampa, you got Seattle, you got Fresno, you got Boston, and you got Jacksonville. Profit margins, highest profit margins, San Jose, Seattle, Buffalo, Rochester, and Hartford, Connecticut. Lowest margins of profit, New Orleans, San Antonio, Houston, Austin, and Dallas. All right. More information on that. You can grab that inside of BAMX. Go to school.com/BAMX. It looks like I'm 5 hours from, Sadie says, I'm I'm 5 hours of St. George. So I won't be stopping in St. George. I'll tell you one thing about Deer Valley. Phenomenal. I mean, I only got in late yesterday. Phenomenal place from what I can see. Finally got a little bit of this morning sun coming in from the window. Montage is obviously just an incredible place where I'm at. But I did come to find no cigar lounges here in Deer Valley. There's some kind of act against pure, pure tobacco. I could see cigarettes, but pure tobacco being smoked indoors. Not a big fan of that. Not a huge fan. All right, Haley, let's get to 10-year if we can. I don't know if you have that up, Haley. If not, I've got it on my screen, but if you can pull it up for everybody. 10-year this is beautiful. You got to pull it up, Haley. It's starting the day at a beautiful number, 399. So under 4 on the 10-year. This is the lowest level we've seen all month. We did hit this momentarily there on Thursday, Friday. I want to say, I think we hit 3997. So maybe just a tick lower. But this is the low spot for the last 90 days. This is great having a 10-year under 4 because we know what that does for mortgage rates. The 30-year fixed mortgage rate hit 6.23 on Friday. That was the same reading on Thursday. So, we're not far from our year-to-date low as we now are 9 days or so away from the Fed meeting. We've got that momentum coming back on the 30-year fixed rate mortgage. And the resistance has definitely been low 6s. We haven't broken that mark to get into that 5 handle. And obviously, certainly haven't consistently gotten to that 5 handle at all. But that's the hope that we can get there here before the end of this year. Danielle Hale from realtor.com, who I'm going to be seeing here probably in just a few hours or so, or certainly for dinner tonight. Danielle, is of the belief that we're going to get to low 6% sustainably by the end of this year. I mean, the end of this year is coming here, and we're 6.25 range. And so, can we get to 6.1? I'd like to be a little bit more bullish than that and say, hey, can we get to 5.9? That'd be fantastic. CME Group is calling for basically near 100% chance that in 9 days the Fed will cut. They've got a 98.3% poly market. Same thing. We're going to be seeing that happen for sure. All right. Become a BAMX member. Go to school.com/BAMX. You get to get all of the data that I release every single day for the hot sheet, as well as all of our Friday content drops, our role play masterminds, which are every single Tuesday, 9 a.m. Eastern or 7 a.m. Local time, where I am here in Utah. I'll be doing it personally tomorrow. Obviously that's 6 a.m. on the West Coast, but get access to all of that at school.com/BAMX. You also get access to Zoodealio. It's a $2,400 value. You just get that free as being a BAMX member. Right now, you can test BAMX for 7 days. Haley, if you could bring up the top 10 housing markets for cash offers. Zoodealio's data has outlined this for us. You've got Vegas in the 1 spot, Naples, Florida, number 2. Listen, Naples has a ton of inventory right now. I know this for sure. And I'm not surprised 2 weeks in a row to see Naples on the list as cash comes in there, and just like we're at the end of hurricane season. Like I mentioned that earlier about the weather. I didn't even want to say that word. So I'm going to knock on the fireplace again. Okay. We're at the end of that season. And so 2 weeks in a row now, seeing cash come into Naples, number 2 in the entire country. Not a huge market for sure, but landing number 2 for top 10 housing markets for cash offers. Yeah. People are seeing, wow, there's some value here. Let me move in now that we're feeling a little bit better, about the weather season. Houston, number 3. Maybe you could say the same thing for Houston. Okay. Houston, obviously a much bigger city. Jacksonville, Miami, Atlanta, Fort Lauderdale, Dallas, Orlando, and West Palm. So a lot of Sun Belt there, a lot of Sun Belt states, primarily really on the top 10 housing markets for cash offers. So is cash moving into these markets right now because they see opportunity and they see 2026 as maybe a mini pop year? I don't know. All right. I'll be in Deer Valley here for the next couple days. beautiful place. I mean, if you've ever spent time out here or you live out here, wow, you are in a magical place. Congrats to you. I'll be finishing the week in Denver, Colorado. It's a short hop from here, where I'll be speaking at the Fusion Rally. If you're in the area, come check it out on Friday. Haley will put the link down below. I think that there's still some spots left that you could claim your ticket. You can use BZ25 and get a deal on that. I'll be doing a keynote the morning of October 24th. That's on Friday. And so looking forward to hopefully seeing a bunch of you guys out there in Denver. It's going to be a room full of operators. So really high level discussion that's happening over there in Denver, and looking forward to finishing my week out there. All right. I'll be with you guys all week. I'm pretty sure about that. And I'm really looking forward to that. Subscribe to the channel if you haven't done so. Subscribe, hit the notification bell here on YouTube. And I will see you guys back here. BAMX members, I'll see you in the role play mastermind tomorrow morning. If not, I'll see you 7:30 local time to Utah, 9:30 on the east, 6:30 in the west tomorrow morning. Until then, toodaloo.